sell on this plan, and then we just got uh, we just traded low on one day low. As market opens, then we any chance of selling because it was still bullish. So coming to this week, um, since well, we have realized these pairs uh, are, are still bullish and trading against the bullish cycle and my value account. So in order to realize to take trades for this coming week, this is what I do. Um, on a D1 chart, I determine the trigger pattern from uh, the higher time frame. As you can see, this market is bullish and I never gave any chance of going back to take out this uh, this liquidity that I was identifying past weeks. But then I won't be forcing any market to revert anytime soon. But for this week, this is what we expected. Um, in this structure, first become things that are um, the first swing is this one with uh, this with our second candle. This is our first candle, the second candle, the first candle, and then each week becomes our flip zone. Let me identify the flip zone here. That's where I was expecting the market to come to previous week, but they used that this week, this candles week as the flip zone, as they did on this swing low. Then this swing low becomes valid line. Uh, this week was traded but not taken out, then making this swing be valid. Then let's see the second swing. We have this one, two, three. Then this candle was traded and closed above, which is the second swing. Then that makes uh, our second swing low to be valid. Then this is what I do again. Now we have two swings that are valid going to the same direction. Then where's the third candle? This is the one. Then where's the flip zone? This is here it was the flip zone. Where did they use the flip zone? On this swing that made the market to go higher. Then we have another swing, the third swing, which is this one, two, three. Then the wick of this candle was not tested, and then we have this wick that gives us the flip zone. Where did they use the flip zone? Previous week on this candle, on these candles, this one and this one. Then meaning last week, beginning of the week, on Monday, they they went to test the flip zone of this swing. Then they gave us of this swing, the third swing low. Then they use this flip zone as their continuation the up to the upright. So we have one, two, three things that are valid. I have identified, and this is the third one. And let me show with the rectangle again. Where do they use?
Oh, 1 minute.
Where they use the candle. And this candle raided this swing so that the market could go higher. Then they use that body of the candle to take out the liquidity from this swing low, then going up. Now we have this swing again that is now valid because um, it is one, two, three. Then the fifth candle raided this week and closed above. Now they tested the 50% of this candle by this move and also giving us the flip zone on this candle on Monday to go higher. Now we have this last swing, which is also valid because the third candle is rated and closed above. Now I'll be expecting the market to at least come to test this flip zone, meaning my bias for last week is no more valid because now uh, the market is, is also bullish. Then I want to just remove this Fibonacci uh, so that we can see where the market is going. So based on this uh, analysis that I made, we don't have any swing highs that are valid. So I'll be expecting the market when they open to come and test our flip zone, then rise for this week. And why I'm saying that because I have identified the bullish movement that has happened on the past weeks, and if on only on this week where I was using my Fibonacci as the entry, we could have at least last week took advantage of our OTE areas on Monday and also our confluences from the previous swing low, this swing as the foot zone on Monday, previous week to take out. If you have any running rates on GBP USD selling, um, once you come to once you be on profit, I will like you to close the trade and look um, for buy setups because this is what I see the bullish movement that I have identified. And how am I going to trade this pair? I hope you understand all the analysis that I made on three-bar pattern, where the market is going, and the bullishness out of this pair. Any question on this one, guys?
No question.
No question. No, thanks a lot. I switch on my H4, and then from previous week. Remember now we're having the swing low. Let me identify the last swing low, guys, before I go to my H4, which is this one. Here is our flip zone. Uh, those candles are this one, the first candle, and then the second candle is this one, and the last candle is this one. Now I switch on to my H4 to identify the high of those uh, days, which is first candle, second candle, and the third candle. The close of that candle is this one. The high of that day is this week, and this week was rated. And look how they use the flip zone on these days. It was on Wednesday. We bounce on a flip zone from the swing low. Then they come on Friday again and bounce on the flip zone. So I'll be expecting them to come because now the market has created the two equal lows here. I'm expecting the market to at least take out this liquidity that they have created here, or either bounce on the previous week psychological support and resistance PSR. Now this is how I put my Fibonacci, guys, because now uh, the low of this week, it was on Monday. Monday's London session was not tested, or the market didn't even come to test this OTE zones. So I will use this as my uh, peak for this week, and then when I put my Fibonacci, it will be like this. Then we have the crossover of 50 over 13 over 50. Then the high of this New York open to before New York close is this one. Then I'll be expecting the market to come at least to test the zones for this week. Then they will rise again. Um, Let me zoom it again so that at least you can see where it will be my target for this week. I'll expect the market to come in and at least to test the zones, then they will rise. And if they remember, guys, I'm just anticipating this one because they can just shoot and don't come to test any of these zones at all, like they did with U, uh, USD. No, it was which pair it was. I forgot the pair that was that rise from Monday. Then when shoot up, like on the structure, when you expect the market to come and test these areas, they just don't come to that point and just shoot up. So this what I'm expecting on GBP USD for this week, and then I will be using this area as my stop loss if they do come to test the zones. But almost I use the tight stop loss when I enter my trade. So I'll be expecting the market to take out this two equal lows and at least they come to test this point or this area, the OTE zone. Then let me just make a structure of ribbon patching on using the H1 chart. This is how I use it. Uh, this was on Friday previous week. The high of that day is this one. The low of that day is this one. Then the second candle It is on Monday, previous week, and slow to the high of Monday. Then the third candle, it is this one, it's low and it's high. That's why I put in my rectangle box. Now we have this swing low, which is valid, and each week the top of it becomes our here's the top, becomes our flip zone. I am expecting the market to take out these lows because they are two equal low. The market in most cases they don't move without taking out uh, the two equal lows. I was expecting them to come to take out this two equal low that they did, but they only took out the the fair value gap that was created when moving away from this point at previous week. And they did the same like they did. They always uh, give you the same structure like they did here. On Monday, they dropped, then they rise. On Monday again, they dropped, then they rise. And doing the very same structure. So I'm expecting them to do the same in here, to come, or either they can open and just come to test this point, or to create another liquidity there, then they drop to come to test these zones because they didn't come to take out any OTE zones on from Monday this week. Then they rise. Then I'm done with anticipation on GBP let me go to Euro USD. On Euro USD, guys, this what I was expecting previous week. I was expecting them to come at least to test this fair value gap as we were discussing on the channel previous week, and they just came to test this point, but they didn't come to test this zone that I was expecting them to come. Now let's identify the swings that are available on this pair. Because the structure that we have is only we're gonna concentrate on this one, and I'm still bullish on this pair also. Uh, this is how I identify this pair. And then the first swing high is this one, which is valid for now. Then the second swing high is this one, two, three. Then the each week is now rated but not close above on the third candle. Now I want to see the reaction uh, of the market on this candle for this week. Then we now have this swing, which is the swing low, which is also valid. One, two, three. Then each week is this one. Then I'll be expecting them to come and bounce on this flip zone when the market opens. Then I'm expecting the market to at least to come to test the 50% of this candle, then rise to test this swing high because it was never tested. This is the third candle. Let's see each week on this. Here's the week. It hasn't been tested of that swing high, so I'll be expecting the market to go and at least test that zone, then drop and use this swing high again and bounce on it and go into uptrend because now as we have anticipated on GBP USD that the market is also bullish on this pair. What you see is happening on GBP USD, it also does happen on Euro USD. So this is how I analyze my trades or my pairs uh, on a daily basis. Now uh, let me switch on to H4. Then this is what I'll be expecting them to do. We don't have any upper lows. Let me just check before I conclude that we don't have any upper lows on this pair. Don't have any. And this one. We took it out on this candle, and it was on Monday previous week. So we could have seen this and use it as our advantage because they now didn't make two equal lows. That also brings the market to move to that direction. So on this week, I'll be expecting them to, but since now they have created two equal highs and they have to take it, here's the two equal highs. So I'll be expecting the market to come to test the flip zone or either, let's see, on Monday, they came on Wednesday to test the OTE zone, then they rise, then this OTE zone was not tested, so I'll be expecting the market to at least come to test this OTE zone. Why am I saying that? I'll be using this area as my uh, peak formation to put in the Fibonacci, where the crossover 15, 13 over 50, then the high of um, this New York session, which is this one. Then I'm putting in the Fibonacci here. And this one. Because the high of this day's New York session is this one. So I'll be putting my high of the day here. Then where am I expecting the market to move this week? To this zone. So I'll be expecting the market to go up and test this zone and or either come to test this week. If this week becomes my intent, then I'll be expecting the market to test at least 50% of this area before they rise. But I'll be using a tight stop loss if the market will come to these zones before they rise. So this is the structure that I'll be expecting this week, guys. On Euro USD. Any question on this one, guys? Any question on this one, guys?
No question.
Any question? Only 10 minutes left for this session to close. Let me go to gold. What are the expectations from gold this week? My anticipation, guys, is still the same. On this day, I was expecting them to buy. Why? This is the reason why. We have on this structure, we have this swing low, which is valid. This week was traded and closed above. Let me identify um, this zone. There is this zone. Now the market came to test the split zone. In this candle, created another swing low, which is also valid. Why are we saying it's valid? It's because no other candle rated and closed below this week. Yes, this week, no candles that was formed that rated that candle and closed below this area. That makes that low to be weak. Now, going forward, we have this that swing low, which is also valid. So I'll be expecting this market this week to come to test the week of this swing low. 1, 2, 3. And the week of that candle was rated and closed above. So the market came to test this week, then gave us the food zone. So I was expecting the market to go above and go to test these zones. They didn't. They just used this area as the food zone going forward. So I'll be expecting them to come again to test this zone, or either the 50% of this candle because it was never tested going forward. Then my Fibonacci will be like this on this week, guys. I'll be using the week of this candle as my uh, peak formation low, and then because I've now identified the swing lows. Let me just identify the last swing that is also valid, which is the swing high. One, two, three, the swing high, which is valid. And when you enter this trade, guys, if you go to profit, this zone will be your TP if the market retraces, but you'll be in profit, and I'll be expecting that move on Tuesday. So if they do come to test the food zone of this swing, or either uses the 50% of this week's candle, I'll be buying the market, and this will be my TP or my break-even zone on the 50% of this present gap. And also the market has never come to test the 50% of this present gap that was created. Now, this is how I see this market. I have identified the swing high that is valid and that has never been tested. Um, which one? So that I can also put in my Fibonacci in the proper way. This is 1, 2, 3. Each week was rated in close above. Now this is the high of this day's New York session. This is one. Here I put my Fibonacci. Then I'll be expecting the market to come to test this point. Remember, guys, I said I'll be looking for the market to test 50% of this candle. Now I want to use this rectangle as my this one. So I'll be expecting the market to test the 50% of this candle. The 50% of this candle will be the flip zone of this swing up, this swing low. They will come to test these zones for this week. I'll be expecting them to come here, then go here. Guys, I hope you understand how I analyze these 8 pairs that I have shared. And I'll also make videos of the pairs that I always trade with you. Hope you enjoyed this video and because my 10 minutes is almost done. Did you enjoy it, guys? Anybody?
Yes. It's loud and clear.
Let me close this.
I cannot hear him.
Guys, I'll be sharing the pairs that I'll be anticipating this week. Ciao.